Now, when we look at the concept of profits, everyone thinks that profits is just simply about making money, right? So profits in economics is slightly different. In economics, when we talk about profits, we are talking about economic profits. And when you talk about profits in the general sense, that's actually what we consider to be accounting profits. So what is the difference between accounting profits as well as economic profits? Accounting profits, you will take your revenue minus your explicit costs. But in your economic profits, you take your revenue minus your explicit costs and also minus your implicit costs. So that's the difference between your economic profits and accounting profits. So what are explicit costs and what are implicit costs? Explicit costs are things like when you pay rent, when you buy raw materials, when you pay your staff wages. These are all known as explicit cost. Right, implicit cost is a little bit more abstract because when you look at implicit cost, we are looking at the concept of opportunity cost. A while back, when me and my friends we went to Bangkok to tailor some clothes, right, we met some Singaporean tailors and we found that these Singaporean tailors, they were actually previously bankers. Let's say if these bankers, they were previously holding on to a $5,000 a month job and they gave up these jobs to come to Bangkok to start a tailor shop. Right, so the opportunity cost of them starting this business will be the $5,000 salary that they have foregone. So in that case, the implicit cost of starting this business would have been this $5,000 salary. So if we were giving you an example, if we had a $10,000 revenue for running a tailor business and our explicit cost, our rent, our labor cost, our raw materials cost $5,000. So if we were looking at purely accounting profits, we take the simple sum of 10,000 minus 5,000, we will be making profits, right? Okay, in economics, this concept of making money, we call it supernormal profits. So when we look at this economic profits, it's slightly different. When we look at economic profits, we need to take these $10,000 minus the raw material cost, the rental cost, the labor cost of $5,000, and we also need to minus away the opportunity cost, which is the $5,000 salary that these previous bankers have foregone. And thus, the economic profit is actually zero. When the economic profit is zero, we say that the profit level is a normal profit level, right? So let's relook at this whole thing again. What's supernormal profit? When my revenue minus my explicit cost minus my implicit cost gives me a positive figure, we call it supernormal profits. When my revenue minus my explicit cost minus my implicit cost gives me zero, we call it normal profit. When my revenue minus my explicit and implicit cost gives me a negative figure, we call it subnormal profit. In other words, you're making a loss. So take note that when we are looking at profits in economics, we are looking at economic profits and not accounting profits.